Welcome back to the Dividend Diplomats YouTube channel. You've got your boy, Bert, the Hurt, the Macho Bert, Hot Hurt Locker, and you know you're rolling with Lanny, Triple L, Hulk Lanny, and we're here to talk to you about a dividend growth stock right now that is ripe with the dividend metrics, and I think Bert might even be buying the stock.
We'll see, though. That's what we're going to find out by the end of this video now, aren't we? But before we start talking about this company, hit that subscribe button below. Give this video a thumbs up. And if anyone hasn't noticed yet, we've released our swag store. So check out the link below. You can get the Diplomats coffee mugs. You can get some laptop stickers, some shirts, sweatshirts with our beautiful logo on it as we all pursue this journey to financial freedom together.
You can get Bert's beard just taped onto your face. You can really make it happen.
I know you can get Lanny's pasta sauce too. You can get it all there.
Chef Boy Lanny. But yeah, let us know what you think of the swag. We appreciate all the support as we spread dividend investing out to the millions and millions of dividend investors out there. It is here. We're filming right now, October 19th. End of day, early evening, late evening, recording videos. That's what we do. And we're here to talk to you about more dividend stocks. You know, Bert, what has been going on this week with the S&P 500 so far?
That's an excellent question, Lanny, because the market continues to be interesting. It is now back above 4,500. It closed today at 4,519. The stock market never sleeps. Last week, we had some interesting turbulent days. This week has not started off so. Earnings season is in full swing, and that is really what is stealing the show. Companies are absolutely crushing their earnings. They are exceeding expectations, and fears of a slowdown, fear of negative news is falling behind because companies just keep performing well.
Yeah, I mean, there's a lot of dividend stocks out there right now that are beating estimates. Procter Gamble, I believe I even saw IBM. Did Philip Morris beat earnings estimates as well?
Yeah, banks are just demolishing earnings right now, too, as they release those provisions and just crush those expectations.
Even though the stock market continues to surge, the dividend diplomats put the stock screener hat on by using the Dividend Diplomat stock screener, which does focus on three metrics. And quickly to go through those, we are talking one, the price to earnings ratio less than the S&P 500, two, the payout ratio below 60%, preferably between 40 and 60%, three, dividend growth, really looking at the history of that dividend income stream growing and the rate of growth. And you know, Bert and I always throw in the bonus metric, that dividend yield last, because we always want to make sure they pass all the other metrics.
And really what the benefit of using our stock screener for every single one of these purchases, it helps us clear out the noise as earnings continue to shine. As you get through the news, you see what's going on CNBC, you see what Kramer's talking about. The metrics allow us to consistently apply the same three and that bonus metric to focus on the true fundamentals of the company and what is going on today. That's why we like the stock screener. We use it with every purchase to kick it off and see if we need to perform even more research and look at additional metrics along the way.
You got that right, brother. And obviously, dividend stocks provide a form of passive income. And really, you want to build that passive income because that's going to help you achieve financial freedom. Or, hey, what better way than to have another income stream so you're not fully dependent on another or one or only two income streams, right, Bert?
That's absolutely right. So yeah, we've been doing a lot of stock analyses recently to see which are the stocks to buy. Our last one, if you check out the last video, was about Carrier Corporation, one of the largest HVAC companies out there, to see where the metrics stood up. It wasn't as undervalued as we were hoping, so we continue researching, which is why we find ourselves today. So Lanny, you kind of want to tee this one up. What sector are we going to be looking at today?
The industry we're diving into today is really in your industrials. I'm really looking at your machines, your nuts and bolts. You know, your physical equipment type of industry here. And this stock I've owned now for years. I've been a very happy shareholder. And Bert, I can't remember. I think you passed at the time, but hopefully the dividend stock analysis we're about to do makes you salivate a little bit. You get your money ready to buy some dividend stocks, especially this one today.
Yeah, that's what we are going to find out here. And guess what? That's the beauty of this too, because as earnings grow, as revenue grows, as the stock price grows, it should all go in unison. So just because you see a stock price jump up, say 40 to 50% over 5 years, does not mean that that company is screaming overvaluation today. It's because that earnings stream continues to grow too, because the revenue continues to grow, which is why we're excited that, yeah, I may have missed out on this stock 4 or 5 years ago when you bought it, Lanny, but that could still be a stock to buy today, even after the price jumped up so much.
Yeah, and this company's earnings has grown at an average rate of over 11% on average per year over the last 5 years. But we are talking about Cummins, ticker symbol CMI. We've actually had a few comments on the YouTube channel about this company recently over the last maybe month or so, and I'm happy to bring it to the table. Right now, Cummins, again, ticker symbol CMI. This stock is currently trading at $240.12, Bert.
I know it's absolutely insane. I think when you bought it, it was what, in the 130s was around that stock price? Because it was in the low 100s when I was looking at it, and I never actually jumped in.
I know everybody gets usually afraid by high stock prices, but that's really just about the number of shares outstanding based on some form of multiple on earnings. So don't really pay attention to stock price. You really need to focus on valuation, right, Bert?
So yeah, it's with that in mind, let's just jump right in here then to that first metrics, the price to earnings ratio. As you said, their stock price is 240 and 12 cents. Their EPS, which as you said, has grown at an average of 11% over the years. Their EPS is $18.80. That gives you a price to earnings ratio of 12.77. Fantastic. The stock market's what? Trading at a PE ratio of in the high 20s, low 30s recently, where earlier in the year it was even in the mid 30s or low 40s. So it's interesting. Clearly, CMI is trading at a discount compared to the market. And to your point, that's why you just don't look at the high stock price and write it off. You compare it to the earnings, you compare it to the multiple, and then you take that number and compare it to the market.
In the words of Cactus Jack, bang, bang. Now, that's again, beating the S&P 500 in the price to earnings, going into that second dividend stock metric for Cummins stock, again, ticker symbol CMI. Based on that forward earnings of $18.80, they currently pay an average or pay a dividend right now of $1.45 per share per quarter, or $5.80 on a go forward 12-month basis. That payout ratio is significantly low, below 31% right now, Bert.
So yeah, there is still plenty of room to continue growing that dividend. It doesn't even meet our perfect dividend payout ratio range. That's how low the payout ratio is. So what's great is you feel great about the safety of the dividend. You're not focused on a dividend cut because there is so much room left for that of your earnings to be paid out in the form of a dividend.
You're not concerned at all, and you're actually looking forward to dividend growth, because with the lower payout ratio, again, below 60% usually means there's got to be some sort of solid dividend growth. And being at barely 31%, for that third dividend stock metric of dividend growth has to look nice.
We'll find out if it does, doesn't it? Their 5-year average dividend growth rate is 6.87%. So it beats inflation at its current marks. And interestingly, you compare that to their last dividend increase, which was just announced in August. That last increase was 7.47%. So they're pretty consistent there in how they're increasing their dividend.
Go.
Yeah, fantastic. But it's a little bit less than their earnings growth on average. As you said, it was, since the earnings was 11%, the dividend isn't quite growing at the same clip. Hence, probably why you have the lower payout ratio.
And hey, you really don't want the reverse way to happen. You don't want their earnings to grow at 2% and their dividends growing at 10%.
Yeah, because then you need to start checking out that balance sheet to see if they're using debt to support that dividend growth there.
Exactly. And before we invert, how many years has Cummins been increasing that dividend?
Yeah, so they're not quite a dividend aristocrat, which is a company that has increased its dividend for 25 consecutive years, but they are well on their way to becoming one. Within a decade, Cummins is going to become a dividend aristocrat because they have increased that dividend for 15 consecutive years. So come 2031, assuming the dividend increases remain the same, they will get the crown of becoming the aristocrat.
There we go. Come on, Cummins. I know you can do it. Before we get into dividend yield, I do want to say their last earnings release tore it off the charts. Cummins actually raised and kept their guidance on, revenue being at a growth rate of 20 to 24%. Don't worry, pandemic, supply chain issues, no sweat. And on top of that, their net income from Q2 of 21, 2x what Q2 of 2020 was. And then on top of that, they're probably one of the most liquid companies I have seen as of late. Cummins' balance sheet is pretty clean. The current ratio, which is how fast can they pay their current obligations with current assets, cash, and short-term investments, is at 1.8 times. Preferably, I look at over 1 times, but they're almost at 2 times over that they can pay their current debts, Bert.
Hey, Cummins, you take it easy. You take it easy, Cummins. You're going to overheat us here with all these engines. They're going to overheat. You're going to be going into your cousin Tony's auto shop here to fix that engine. Cool it off.
Don't make me call my cousin Johnny. Little make big on you over there, Bert.
But no, in all seriousness, those are fantastic results. And I mean, think about that 20% revenue growth, a balance sheet that is extremely liquid. You don't have to worry about them even covering the short-term liabilities, which is hard to come by in this day and age. And yeah, that net income in the just a year after the pandemic is more than doubles, but that makes sense because you have all of these delivery shortages. You have all these goods that are getting transported everywhere as the economy continues to soar. Cummins is the type of company that's going to benefit from that.
And one thing I do want to mention is that the S&P 500 obviously year to date is up over 20%. The S&P 500 in the last 52 weeks, 1 year, is up over 30%. But Cummins right now has lagged the market. They're only up about 8% year to date in 52 weeks. So you may be catching some value here with Cummins, and there may be a lot of room to go on this company. So Bert, based on the news, based on the first 3 metrics, what about that dividend yield?
All right, their current dividend yield is 2.42%, so trading at a nice premium there compared to the broader market, and it crushes what you are getting in your online savings account because you can check Ally, and I can guarantee you your savings rate is not 2.42%.
Exactly. And Bert, with Cummins, again, ticker symbol CMI, that 5-year average dividend yield is right around this mark. They're usually in that 2.5 to 2.6%. So I think you're right. I think the yield has a little bit ways to go. And I think 2022 could be a very exciting dividend increase year.
Yeah, what will also be interesting too, as you read the news here recently, you see this with Cummins, they're going to be the type of company that will transition if there is some kind of stimulus that's passed that focuses on moving companies and trucks from those gas engines to those electric engines and making wholesale changes in that industry. Cummins is going to be the type of company that benefits from it because they have the capacity, the size, and the bandwidth to be able to take advantage of that too. So there could be some huge benefits coming from there if everything passes too, which we still have a long way to go.
No, exactly. Very exciting. A lot of potential here with Cummins. In summary, with Cummins, again, ticker symbol CMI, that price to earnings ratio is barely over 12, at 12.77 price to earnings. That payout ratio is extremely low at 31% or just under. 15 years of increasing their dividend. In the last 5 years, on average, it's just about 7%. And last but not least, that dividend yield at 2.42%, really complementing that 7% growth rate.
Yeah, so I think everyone, based on the metrics here, Cummins deserves to be at the top of your watch list. And heck, I could even see yeah, why Lanny would want to buy, why I would want to buy, and it may find its way onto purchases, at least for me, in some capacity, whether it's 1 share, 2 shares, 4 shares, 5, however many. It definitely deserves consideration, especially at these metrics. It's not too frequent that it checks every single box with flying colors in the way, and it is still trailing the broader market. So what are you thinking, Lanny?
I'm thinking I'm interested in adding to my current position. I already do own a lot of shares of Cummins, but I am interested in adding to my current position. Really like the dividend growth. I think there's a lot of future potential with Cummins.
So everyone, let us know. What are your thoughts about Cummins? Are you buying, watching, or are you passing in favor of another dividend stock? Also, please, if there are other companies you want us to cover, please let us know in the comment section below. We've also added PNW to our future video list as well, because that seems to be one name that keeps popping up in the comment section. So we're going to knock them out maybe in the next week or two to see if we're going to be buying them along with all of you that have done so already.
Guys, if you haven't already, definitely hit subscribe so you don't miss a beat from Bert and Lanny at the Dividend Diplomats. Give this video a thumbs up if you enjoyed it. Guys, let us know how much you love dividend investing, and we love seeing your passive income stream grow. That was Bert, and this is Lanny from the Dividend Diplomats. Over and out.